Introduction to cryptocurrencies. Cryptocurrencies, like Bitcoin, have taken the world by storm, introducing a new way of thinking about money and its role in the economy. These digital assets are decentralized and use cryptography to secure transactions and control the creation of new units. Bitcoin, created in 2009, was the first and most well-known cryptocurrency, but now there are thousands of different cryptocurrencies available. Unlike traditional fiat currency, which is controlled by governments and central banks, cryptocurrencies operate on a decentralized network. Transactions are recorded on a public ledger called a blockchain, which allows for transparent and secure transfer of funds without the need for a middleman. This decentralization has led to a new era of financial freedom, allowing individuals to have more control over their own money. The use of cryptocurrencies has also had a significant impact on the economy. They have the potential to disrupt traditional financial systems and have already begun to challenge the way we think about money and value. Cryptocurrency exchanges have become major players in the global financial market, and businesses are beginning to accept cryptocurrencies as a form of payment. In this video, we will explore the history and development of Bitcoin, as well as its impact on the economy and society. We will also examine the potential of other cryptocurrencies and the technology behind them. The rise of cryptocurrencies is a rapidly evolving field, and this video will provide an understanding of the current state of the industry and its future possibilities. Analysis of Bitcoin. One of the most notable features of Bitcoin is its decentralized nature. Unlike traditional currencies, which are controlled by governments or central banks, Bitcoin is not subject to any central authority. This means that transactions on the Bitcoin network are not subject to the approval or regulation of any government or financial institution. Another important feature of Bitcoin is its transparency. All transactions on the Bitcoin network are recorded on a public ledger called the blockchain. This ledger is maintained by a network of computers that work together to validate and record all transactions. This allows for complete transparency and security of transactions. Bitcoin also has a limited supply of 21 million coins, which is designed to control inflation. This limited supply also means that the value of Bitcoin can be volatile, as demand and supply can fluctuate. In addition to its decentralized and transparent nature, Bitcoin also offers a level of security that is not found in traditional banking systems. Transactions on the Bitcoin network are secure due to the use of cryptography, which ensures that only the person who owns a Bitcoin can spend it. Despite its many advantages, Bitcoin also has some limitations. One of the biggest limitations is its scalability. As more people adopt Bitcoin, the network can become congested, resulting in slower transaction times and higher fees. Another limitation is the lack of regulation. As Bitcoin is not subject to any central authority, it can be used for illegal activities. This has led to concerns about the potential for money laundering and other financial crimes. Despite these limitations, Bitcoin has continued to gain popularity and acceptance as a form of payment. Many businesses and individuals have begun to accept Bitcoin as a form of payment, and it has also been used as a form of investment. Analysis of alternative cryptocurrencies. These digital assets are created through a process called forking, in which developers take the open source code of Bitcoin and make modifications to it to create a new cryptocurrency. One example of an altcoin is Litecoin, which uses a different algorithm for its proof-of-work consensus mechanism compared to Bitcoin. This allows for faster confirmation times and a higher maximum supply of coins. Another example is Ethereum, which operates as a platform for decentralized applications and smart contracts. Another category of altcoins is called privacy coins, which use advanced cryptography to hide transaction details and protect user anonymity. Examples of privacy coins include Monero and Zcash. It is important to note that while some altcoins have shown promise and have gained significant market capitalization, the vast majority of them are considered to be altcoins for a reason and are highly speculative and risky investments. Additionally, many altcoins lack the same level of security and resilience as Bitcoin. Furthermore, most of the alternative coins were created to address a certain problem or to improve the technology of Bitcoin. Therefore, it is important to understand the unique properties and use cases of each altcoin before investing. Implementation. In this chapter, we will discuss the various ways in which Bitcoin and other cryptocurrencies can be implemented in the economy. This includes both the technical aspects of implementing a cryptocurrency system, as well as the legal and regulatory considerations. One key aspect of implementing a cryptocurrency is the technology behind it. This includes the use of blockchain, which is a distributed ledger technology that allows for secure and transparent transactions. Additionally, the use of cryptography is crucial for ensuring the security of transactions and the integrity of the ledger. Another important aspect of implementation is the legal and regulatory environment. Different countries have different laws and regulations regarding the use of cryptocurrencies, and it is important to understand and comply with these regulations in order to operate a cryptocurrency system legally. There are also different ways in which cryptocurrencies can be used in the economy. For example, they can be used as a form of digital currency, as a way to raise funds through initial coin offerings, ECOs, or as a way to facilitate smart contract transactions. In terms of the future, it is likely that the implementation and use of cryptocurrencies will continue to evolve and grow. As technology and understanding of the space advances, new and innovative uses for cryptocurrencies will likely be discovered, and the integration of cryptocurrencies into the global economy will likely become more seamless. Bitcoin's real value. The value of Bitcoin, like any currency or asset, is determined by the market forces of supply and demand. The overall market capitalization, or the total value of all Bitcoins in circulation, has fluctuated greatly since its inception. However, it is important to note that the value of Bitcoin is not solely based on its market capitalization, but also on its utility as a medium of exchange, store of value, and unit of account. One way to measure the real value of Bitcoin is through its purchasing power, or the amount of goods and services that can be purchased with a single Bitcoin. This can be compared to traditional fiat currencies, such as the US dollar. Additionally, the real value of Bitcoin can also be evaluated through its network effect, or the increasing value of the network as more individuals and businesses adopt and use it. Another aspect to consider is the cost of mining, or the amount of resources and electricity needed to maintain the network and validate transactions. This cost can also impact the real value of Bitcoin, as it can influence the supply and demand of the currency. It is also important to note that the value of Bitcoin is highly speculative and subject to high volatility. The future value of Bitcoin is uncertain, and it can be affected by various factors such as government regulations, hacking and security breaches, and competition from other cryptocurrencies. Therefore, it is important to approach any investment in Bitcoin with caution and to do thorough research and analysis before making any decisions. Bitcoin's future. The future of Bitcoin is a topic of much debate and speculation. On one hand, some experts believe that the decentralized nature of the currency, combined with its limited supply, make it a strong store of value that will continue to increase in value over time. Others, however, argue that the volatility and lack of regulation surrounding Bitcoin make it a risky investment with no real underlying value. One potential future for Bitcoin is its increasing use as a means of exchange, particularly in countries with unstable currencies or poor economic conditions. As more merchants begin to accept Bitcoin as a form of payment, it could become a more widely accepted and stable currency. Another possibility for Bitcoin's future is the emergence of new technologies and innovations that build on the blockchain, the underlying technology behind Bitcoin. These developments could lead to new and improved forms of cryptocurrency that address some of the current limitations of Bitcoin, such as scalability and transaction speed. Despite the uncertainty surrounding Bitcoin's future, it is clear that the technology behind it has the potential to revolutionize the way we think about money and financial transactions. As more individuals and institutions begin to explore the potential of blockchain and cryptocurrency, the future of Bitcoin and its impact on the economy will continue to be a topic of great interest.